Good morning. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to be going through some live mortgage rates, and then we're going to do a deep dive into 5 to 8 unit properties. We'll get started here in just a moment. Just let us go live on all the different platforms here. We got the chat up on the screen there. In the meantime, feel free to drop a comment there in the chat. You can drop any questions in the chat as well as we go through the presentation here today. Definitely appreciate everybody tuning in nice and early. All right, it looks like we're live on all the different platforms. We'll go ahead and get it started here. We'll take the chat off the screen for now. We'll keep dropping comments there in the chat. Drop any questions you have in the chat as well, but we'll go ahead and get into it here. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender specializing in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our live mortgage rates, and then we do a deep dive into a different topic. Today's loan topic is going to be 5 to 8 unit properties. Now, again, we do specialize in non-QM loans here and deal with a lot of investors, so 5 to 8 unit property loans are definitely one of our popular loans here at the Mortgage Calculator. So our sales manager, Jose, with 28 years of experience, will go ahead and take us through a deep dive into that shortly. But before we do that, we'll pull up our rates like we do every morning and see what they're looking like. So Nick, if you're ready, let's go ahead and pull up the live rates.
All right, refresh my screen here. And before I show it, let me just go through my speech. So we're about to look at all the live rates for our standard programs. It is May 1st, just after 11 a.m. Eastern, so all of these standard programs are live here. We're going to look at the lowest rates we can offer for each program, but definitely cue in on the APR, which we will use to compare across the programs. If you'd like a full breakdown, a full loan estimate that itemizes all the fees that go into the APR, please get with our team members. We have over 300 loan officers that can help you out. So for all of our demos here that I'm about to show, we're going to use purchase example, 500,000 purchase price, 400,000 loan, 80% loan to value is what that breaks down to. 760 FICO, so high FICO, 40% debt to income ratio, and for our DSCR loans, a 1.5 ratio. Let's go ahead and share my screen, and we'll see what we're looking like today. All right. So we always start in the top left here, most common option, 30-year fixed conventional primary. For our borrowers that qualify for conventional standard program, rates as low as 6.99 with an APR coming in at 7.343. So a great option for our customers that qualify for conventional. Now, if for any reason our customers don't qualify for conventional, the next option we typically want to look at is an FHA option. FHA allows more leniency on credit issues as well as a higher debt to income ratio. And FHA today is coming in at 6.125 rate, lowest rate option. And that final APR with all the costs comes in at 7.125. So notice it's a touch cheaper than conventional today if you compare those side by side. So if our customer qualifies for both, definitely don't overlook the FHA. This APR does include the upfront and yearly mortgage insurance that is required. Now the next option for our active military and eligible veterans, VA. So if you do have VA eligibility, definitely some great options. Rates as low as 6.375, but notice the APR when we compare them side by side, it has the lowest APR here of the three options for our veterans there that are eligible. Definitely a great benefit, 6.697. So notice that the mortgage insurance is not needed on these options, so it comes in a little bit lower for our veterans. And USDA, also another government program that is for our borrowers that need possibly some assistance in those areas that are eligible for USDA, rural areas. So if the property is eligible for rural and eligible for USDA, the rates can be as low as 6.25 and the final APR 6.979. So notice this is also lower than FHA and conventional. So if our property's in a USDA area, definitely check out USDA. If our customer qualifies for VA, definitely the best option here for our customers as far as the government agency programs. Next, we'll get into our non-QM options. So first option here, 30-year fixed, non-QM, alt-doc primary. Typically, alt-doc means a bank statement or some other form of documentation, but the lowest rate option we have today using alternative docs, 7.25 rate. Final APR comes in at 7.589. So actually very comparable to conventional today, as the conventional rates are definitely going up a little bit. Non-QM hasn't changed very much. So a great option for our customers that need to use alternative documentation. And next to that is our alt doc option for an investment property. So same types of documents, bank statements, P&L, all those different options we go over. This time it is for an investment property. 7.625 rate, final APR 7.976. So this will be good to compare against our other investment options here, which we'll show now. So if we go conventional, 30-year fixed conventional for an investment property, rates come in at 7.5, final APR 7.855. So it's a touch cheaper than bank statement options for conventional, but always recommend our investors to check out our favorite option, our DSCR option. No income, no employment, no documentation on that. Simply use the estimated rents to determine a DSCR value. As I mentioned, these estimates are based on a DSCR value of 1.5, meaning the property more than cash flows on a monthly basis versus the PITIA, the mortgage expenses. So high DSCR ratio here for these examples, but amazing rates. So you see here our 3-year prepayment option, which is pretty much the standard option, comes in at 7.5 rate, same as conventional, but actually a touch lower on the APR, 7.831, so actually beating conventional today for a 3-year prepay. And to sweeten the deal, we have options for a 5-year prepayment penalty, which improves the price even further. So we can go as low as 7.125 rate for those. Final APR comes in at 7.458, which absolutely smokes conventional. So definitely recommend our investors check out the DSCR options. And we'll do one more row here, a couple different options. The final DSCR option, 30-year fixed, but with no prepayment penalties. If some investors don't like prepayment penalty, no problem. It is a little bit more expensive, so rates as low as 8%. Final APR comes in at 8.359. So notice that's a touch above conventional. So definitely recommend our investors add a prepayment penalty, and you see how much that sweetens the pot there. And for our final two examples here, second mortgages, very popular request these days. Not a HELOC, this is a fixed rate second mortgage. So 30-year fixed second mortgage for a primary. Our lowest rate options come in at 9%, and the final APR comes in as low as 9.418. And for an investment property, our fixed rate second mortgages for 30-year fixed comes in at 9.875. Final APR 10.341. So those are very popular when our customers don't want to touch their low rate first mortgage. We can add a primary or an investment second mortgage to those customers. Let's go ahead and switch my screen here, and we'll get into today's topic. So today, Jose is going to be talking about our DSCR options for 5 to 8 unit properties. So can't really do that on the typical scenario here. All of our scenarios today were on your standard 1 unit property, so we can compare side by side. But in our deep dive here, Jose will go into our very specific examples where we can do 5 to 8 unit, which would otherwise be a commercial property. So this is a small commercial property. We can use the same basic DSCR principles. So Jose, if you're ready, let's have you go ahead and show these examples.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. 5 to 8 units is one of our more popular product categories because we're one of the few that are offering this product as well as the other 5,000 non-QM product combinations that we offer. Now, what we are referring to here when we're talking about a 5 to 8 unit property is one folio, right? One property that has from 5 to 8 individual units, but it is one folio number. It is not 5 to 8 individual properties grouped into one loan. I state that because sometimes that is a misunderstanding. So the great thing about this product that we offer is that this is sort of a hybrid product. It is commercial in nature because it is 5+ units. However, it is underwritten more by residential DSCR guidelines. And what I mean by that is we're not going to ask you what is the zip code. look at the MSA and tell you, I'm sorry, there is too low of a population density in that area. We can't do it, even though it's an amazing property, 2.5 DSCR, not in a rural location, but simply because low population density in the more commercial space, that loan would be rejected. In this option, it is full speed ahead. So let me go ahead and share my options with you this morning. I have some purchase options with you and a refi option. Maximum LTV for this product is 75% LTV for this hybrid product that we're talking about. I'm giving you just one rate. However, there are additional buy down options here, but I'm trying to keep it more or less on the same rate so that I can give you the comparison with the different credit scores. Here, this is at our best tier, which is 760 plus, and we're looking at 9% rate with a cost of 1.075 points to get that rate. So you can buy it down to the low eights. So next example is the same option, 75% LTV, but with a 740 to 759 credit score. So you can see here 9%, the cost increases to 1.45 points. But the important point here is that we are still 75% loan to value. That is the max for this product, for this option, should I say. So now 720 to 739 credit score, we can still obtain 75% LTV. Our 9% rate is now costing us 2.075 points. So still 75% LTV down to a 720 score. So now once we drop to a 700 to 719 for this particular low interest rate option, our LTV drops to 70%. At 70% with a 700 to a 719 score, you're looking at 9% with a cost of 1.7 points. So now our cost drops a little bit from the previous example, because now we're at 70% LTV instead of 75, because 70 is the maximum below a 720 credit score. And now for our 680 to 699 credit. Hold on a second. So I did mention 700. We dropped to 70, 680 to 699 credit. Now we dropped to 65% LTV for this low interest rate option. The reason I'm mentioning this low interest rate option, because I'm going to show you another option after this that lets you go down to a 650 credit score up to a 75% LTV. But it's higher rate, as you will see. So now here we're looking at 65% LTV, and the rate again 9%. The cost again 1.7 points. So 9% to stay the same cost, but again we drop the LTV to 65% LTV. And then we have our 660 to 679 credit, and we're looking at 11.99% rate with a cost of 1 point. Now this is our higher interest rate option, and actually we have a typo there. I do apologize. That is 75% LTV on this one. So this option, 75% LTV. Again, we take it to the maximum, but again, as you can see, the rate does increase to 11.99, cost of 1 point. But again, we are now 75% LTV. So now 650, I dropped it even lower, 650 to 679, 11.615. 70% for this. Again, this is the higher interest rate option, but the main benefit here that now down to a 650 credit score, we can reach 75% LTV. And our last option here is our cash out refi option. The maximum LTV for the 5 to 8 unit is 70%, regardless of the credit score. So I'm showing you here the best case option for low interest rate option. We're looking at 9.125 with a cost of 1.2. So you see the big difference. We go from 11.65 to 9.125, 70% LTV for this low interest rate option, 5 to 8 units. So the main thing I did want to note between the low interest rate option and the high interest rate option isn't just the rate. The main difference between those two options is that that higher interest rate option is a commercial option that will ask for the zip code, will review the population density in the zip code, and either will or won't do it depending on that number. Whereas the lower interest rate option is the hybrid that I mentioned to you that treats it more like a residential DSCR. They don't care about the zip code population density. The one thing they will care about is that if the appraisal comes back noting that the property is rural, they will not do the loan if it's rural. Neither option will actually. So very good options here for our 5 to 8 units, maximum 75% LTV for our low interest rate option.
Okay, it looks like we had a question come in from IG here. Let's see, what is the question? Doing DSCR loans, do you do them in an entity and we'll do a secondary loan for renovations?
On the DSCR loans, you have the option to close it in a personal name or close it in an entity. Now, as far as renovations, that's a totally different topic. You can close a regular DSCR loan, right? But if the property has condition issues, depending if you're just talking about you just need a little bit of paint, that's one thing. But if you're like missing components, holes in the walls and stuff like that, you are going to have an issue closing the regular DSCR loan because you'll probably get the appraisal subject to those repairs as opposed to as is. So we do have fixed flip loans that are awesome because the fixed flip loan never uses the personal income of the borrower. The fixed flip loan, basically we analyze the profit in the deal, the experience level of the borrower, and that's how we qualify the loan, right? So in that you could do a fixed flip loan, which is a short-term bridge loan, and then as we commonly do, then we refinance that borrower into the DSCR loan once the renovation is completed if they plan to hold the property.
All right. Well, I don't see any other questions, so we can go ahead and wrap it up here. Remember, we do this show at 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different loan topic. So we'll have a new topic for you tomorrow. Appreciate everybody tuning in. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.